Welcome back. You're watching The Money Show on ET Now. Well, here's some interesting data from PolicyBazaar. During March, April and May, 80% customers have ported to buying higher insurance cover versus just 30% last year. Moreover, the average cover purchased by a customer has doubled to 25 lakh rupees. What's the reason behind this porting, and how do you decide on whether a sum insured is adequate for you or not? If not, how do you go about porting? What are the rules around it? Let's discuss all of this and more with Amit Chhabra. First up, we'll be talking about health insurance. Later, we'll be talking about capital guarantee plans as well. So Amit Chhabra, Health Business Head for PolicyBazaar.com, joins us now on the show. Amit, thank you so much for taking out time and joining us today on ET Now. So to start with, what really led to this porting to higher cover, Amit? Was it the fact that we have unfortunately seen an increase in the average medical bills as well of an average Indian family in these last few months, or was it simply the fact that in general as well we Indians do have a lower than average sum insured, which is actually not good?
So two things that I'll point out here. First, I think what we have seen is a huge paradigm shift in the last 1 year since COVID has hit us. So pre-COVID, when we talk of pre-COVID, a lot of people would just skip buying health insurance altogether, or they would buy a very small cover because they would think that I'm young and healthy, I exercise, nothing's going to ever happen to me. So maybe when I'm old, I'll buy a health insurance policy for myself. I think that was one side of people. There was another set of people which always thought that nothing big is going to happen to me. In case of a small accident or a dengue or something, probably a 5 lakh cover is enough. However, both of these paradigms have been challenged extensively because of COVID. So if you look at what has happened in the last one and a half year in India, there have been very young, healthy people as well as elderly people as well. Both have got claims which go in the excess of 10, 15, 20 lakh rupees as well. That's part one. The second thing is COVID is something which is impacting not just one person in the family, but multiple people in the family. What that has meant is that in case a family with a 10 lakh floater policy gets impacted, the total claim may go up to as high as 30, 40, 50 lakh rupees also, because you will have multiple people in the family getting impacted. So because of these two reasons, what a lot of consumers have now realized is that they need a high sum insured cover. Now, if somebody is buying a fresh policy, then it's a lot easy to buy a high sum insured cover because you can just buy that from scratch. However, what's again happened is a large chunk of people who have existing health insurance policies but have a low sum insured, say 3 lakh, 5 lakh or even 10 lakh rupees, they are now migrating to a high sum insured policy. And it's quite a no-brainer of a thing to do, and I'll explain why. Because the price difference between a 5 lakh or a 10 lakh policy and say a 1 crore policy is not much. It would typically be 15 to 20 to 30% maximum. So by paying just 2-3 extra thousand rupees, one can move from a 5 lakh policy to a 1 crore sum insured policy. So 20 times extra sum insured, which is the need of the hour right now, because in case COVID happens, it happens to the entire family and the bills can really shoot up. That is the clear trend that we are seeing. So more and more people are porting out, and the biggest reason of porting out is they want to get into a policy that gives them a high sum insured. And the most prominent amongst them is the 1 crore sum insured plan.
So how do you decide on what's a proper sum insured so that I don't have to worry as well about porting then, Amit? How do you determine that? Because it's virtually impossible, right, to know the probability of your family members falling sick. Plus then, we are already faced with so many expenses. Many individuals have their income stagnating. So if I'm going to increase my sum insured, then I have to be ready to cough up that higher premium as well associated with that, which obviously is going to, pinch your pocket as well. So in such a situation, how do you decide on the sum insured?
So Mubina, that actually may not be entirely true, and I'll tell you why. As I said, the price difference between a 5 lakh plan and a 1 crore sum insured plan, so this is 20 times higher sum insured, but the actual price difference is probably 3,000-4,000 rupees for the entire year. So the price difference is not much, and that's why it becomes almost a no-brainer to go for a high sum insured policy. Now, a rule of thumb to look for is specifically if you're living in a tier one city like a Delhi, Bombay, Bangalore, Pune, etc., where you have large hospitals, you have the large chains of hospitals, one must look to have at least 10 lakhs sum insured per person in a policy. So if you are an individual, you must look to have at least 10 lakhs. If you are a family of, let's say, two people, then you must look to have at least a 20 lakh cover. But again, as I was saying, the actual cost of a 10 lakh plan and a 1 crore plan is actually not very far away. So by just paying probably 1,000 or 2,000 rupees more, you can upgrade your 10 lakh plan to a 1 crore plan. Which is why I'm saying that the right sum insured for anybody today is the 1 crore sum insured, because you're hardly paying anything extra. 1,000 rupees for the entire year is a very small amount. But what you get for that is complete peace of mind. And which means that, come whatever the claim may be, in case COVID happens or anything else happens, at least one's covered. So one must look to do that, and in case somebody wants to save, a few, let's say 1,000, 2,000 rupees, there are options available. One can go for a 30 lakh plan or a 25 lakh rupee plan also. There is minimal difference, but yes, that can help you save a bit of money as well. But again, for all the viewers, I think it's important to understand that a 5 lakh, 3 lakh or even a 10 lakh plan will definitely not be sufficient. So do upgrade your plan. I think that is critical.
Yeah, absolutely. I mean, we've seen live examples as well of that happen in these last few months itself, despite the caps put forward by the government. Unfortunately, the bills have been, very telling. How easy is it to port? Who is it? Who can do it? And are there any limitations to, porting your insurance plan if I feel that, my sum insured is not enough?
So the process is actually very, very simple. It's just the way one can port a mobile number today. That was the concept of portability started with mobile numbers. So it's exactly the similar process. One has to just fill up a simple form online where you have to provide details of your previous policy. So let's say if one had a policy with company A for the last 5 years, you have to provide all of those details of the policy in a form. It's a simple form. You have to enter the policy number, the sum insured you have, in case you have claimed or not in the previous policy. And that is actually it. Nothing else is required apart from that. It can be completed within a matter of a few minutes. And that's it. It's all online. No documentation is required. No physical form signing is required. So it's actually a fairly simple process if one has to port. There are no specific requirements as well. So porting a policy is exactly like buying a new policy. Nothing really changes. The underwriting, the process remains exactly the same. One just has to provide those basic extra details, and that is it. One thing very important that I'll mention here, and that's very specific to COVID. So in the COVID times, what we have also seen is the bills, the consumable item expenses in a medical bill has also started to increase. So historically, what we had seen was consumable items like PPE kits, gloves, masks. These are small items which are used during the treatment. Now, historically, they weren't ever covered through medical insurance. So medical insurance never covers for these items. But the good thing earlier was the value of these items was very small. It was typically about 2 to 3% of the total bill. So it never pinched anybody. Unfortunately, during COVID times, what's happened is the value of these consumable items has increased quite dramatically. And it's now become 15 to 20% of the total bill, which is where it is pinching a lot of customers, because insurance companies never used to pay for that, but earlier it was a very small amount. Now it's become a large amount. So when one is looking to, let's say, renew the policy, if you are porting, look to go into a policy, one which has a high sum insured, as we've already discussed. Second, look to go into a policy which covers for these consumable items like PPE kits and all. That will ensure that your policy is truly cashless and there is nothing being paid out of from your pocket, and everything's being taken care of by the insurance company. I think this is something which is very important to take care of when you're porting your policy.
Okay, so obviously a good generous quantum of sum insured, and also ensure that it covers consumables as well, while earlier it may not have been too much of a worry because it's a small portion of the bill. But now, with the changing nature of this health crisis around us, it has become a big portion of the, of the hospital bill. Okay, I want to now shift our focus towards capital guarantee plans, a little away from health insurance, and talk about these capital guarantee plans. Now, as the name suggests, Amit, capital is guaranteed plus you get any possible market-linked returns. Where is the catch of it? That's what I want to ask you. Is there perhaps a certain amount of time that your money has to be locked in? I just want to know where's the catch here, because it sounds too good to be true, right?
Sure. So again, as you said, right, it sounds too good to be true, but it is true. So see, today, in India, a fixed deposit is seen as the safest instrument when it comes to parking your money and investing your money. That's what a large part of India does. A lot of people are not aware of this option and so that's one part, right? You could put your money in FDs. The other option is one puts their money in equity linked instruments, where a lot of people do get afraid because you might lose money or you might not earn as much interest because it is linked to the stock market performance. So here is an intermediate option for a lot of people, where essentially what happens is there is a minimum guaranteed amount which you get if you invest into a capital guarantee plan, and as you said, you also get an upside. So there's no downside. There is a minimum guarantee that you get, but there is an upside in case the fund performs better than market. Then the customer gets that upside. The only catch there is this is insurance. So what will also happen with this is there will be a certain lock-in period that comes, and it varies by plan to plan, but there will be a certain lock-in period that comes. So in case one is looking to park their money for, let's say, 3 years or 5 years, then this is the plan to go for, because it will give you a higher investment and there is no upside, there's no sort of downside, because you will definitely be getting a certain amount which typically we have seen is higher than FD rates. In fact, one of the things that started to happen in the recent months is FD rates have gone down. So in such a scenario, this sort of becomes an optimum option for somebody who's very sure that they don't need that money, let's say in the coming few years. If you don't need that money, then yes, one must look at CG plans, because they're actually the ones which will give you the optimum return and also they'll cap your downside. So it's sort of best of both the worlds, given that you're okay with parking your money for some time.
Okay, great. So the best part is that in this low interest rate environment, it also gives you better than FD and debt mutual fund returns. It's a market-linked product that also brings on board the benefits of insurance as well. Okay, well, on that note, Amit, we'll have to wrap it up on our conversation. Thank you so much for joining us today on the show and, giving all of our viewers a bit of a guidance on getting proper health insurance and the pros of capital guarantee plans as well.